In this next video, I'm going to explain to you the 60% tax trap, which is a marginal tax rate. It's not the effective tax rate that you pay. And in this example, we're going to use £123,000. If you'd like to learn more about personal finance and money management, don't forget to give my page a follow, but let's go. So at £123,000, I'm not going to act like I know exactly how much tax you're paying, but whatever this figure says, okay, that's how much you're going to pay in contributions to tax. But what we want to actually figure out is what is your actual effective tax rate? So how much tax are you paying as a percentage of your income? So we're going to take the total take home and we divide it by the gross take home, which is 77,000 divided by 123,000, and you'll get about 63%. So you're paying approximately 37% in total tax on your income. So where does this marginal tax rate begin? Well, it's actually in the salary band between 100,000 and 125,140 pounds. This is because for every £2 you earn over £100,000, you lose £1 from your tax-free allowance. Now, I'm sure most of you are aware of builders and tradespeople that have massive driveways with 5 cars and a big house, and their income is somehow £12,570. This is because what they're effectively doing is living off the basic tax-free allowance of their income, but they're doing some other stuff, which we can talk about in other videos. So this is what's happening in that tax band, is that you're losing your tax-free allowance. And what that looks like is that you divide the £23,000 by the £2 that you're losing over the £100,000, and you end up with 11,500. And this 11,500 is actually how much you're losing from your personal allowance. So how much of your personal allowance is actually remaining in that band? Well, it's £1,070. Now, we have progressive tax rates, and between 100,000 and 125,000, you pay about 40% tax. So on the £23,000 above the 100, you're going to pay 40% tax on that, which is going to be 9,200. And then also, I should say, this is mirrored in my camera view, so I need to read it backwards. That tax-free allowance that you lost earlier is also taxed as 40%. So you're going to be paying £4,600 tax on that allowance. If you add the two of those taxes together, you get 13,800, which is the 60% of 23,000. You're losing this money, but it's now shown as a tax against the allowance that you would have had. And this is where the 60% tax trap comes from. And it's only a quirk within this salary band. Not financial advice, but this is why most people that earn between 100,000 and 125,000 pounds almost always sacrifice the amount within that band. So for example, this person earning 123,000 pounds would typically, not always, but sacrifice the 23,000 pounds towards their pension contributions. If you enjoy this content, don't forget to give my page a follow. Good luck.